Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan. He's the Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, great to have you on the show again.
Always good to be here, Brian.
Now, Vishnu, let's take a look at the markets across the region. It's a sea of green. We'll start off with Bursa Malaysia, which is at 1,578.9. It's up 0.58%. We've got the SGX also up 0.53% at 2,989.72. Now, across the region, then we have Nikkei is up 0.27% at 29,488.33. The Shanghai Composite is up 1.33% at 3,555.28. The Hang Seng is up 1.69% at 29,587.74. The ASX 200 is up 0.82% at 6,817.7. And rounding off our updates is the Kospi, which is up 0.63% at 3,063.33. So Vishnu, what's your view on this? Why are markets reacting this way?
Well, I think, to sum it up, markets seem to have stumbled upon a patch of relief for now. And that's pretty much what it looks like. To give it some context, over the last couple of weeks or so, we've seen an increasing sell-off in equity markets, driven mainly by fears that US Treasury yields, the long end interest rates, are moving up exceptionally quickly. And initially, the Fed did not seem to mind it. In fact, they said this could be a reflection of recovery. And so that unsettled markets, just thinking of the prospects of interest rates getting ahead and hence, hijacking the recovery. But since then, I think there has been some central bank action from the likes of the RBA or talk from the ECB, BOJ saying that they're watching long-term rates. And overnight, the Fed's Bernard also said that she's watching long-term interest rates, particularly the speed and the depth of the movement. So I think that has calmed markets down. And so markets are now picking up where they left off. And because of the extended sell-off, there are some opportunities that markets are happy to explore again.
Now, let's talk about this recovery theme again and look at two data points this morning. Now, we start with Australia. Its GDP rose 3.1% in a seasonally adjusted terms for the December quarter. Now, that figure beat expectations from an economist Reuters poll, which predicted a 2.5% rise. So that was significantly improved performance compared to market expectations. Now, on the China side, the Caixin Services Purchasing Managers Index came in at 51.5 for February. Now, that's a decline of January's reading of 52. Now, looking at these two data points this morning, what is your read on the numbers on the overall recovery story?
That's a very good question, Brian, and I like the way you framed it. So first things first, let's get the time dimension out of the way. One is backward looking for Q4, and the other is for February, so a little bit more forward looking. But I think there's a more interesting part to this. And that interesting aspect is that for Australia's case, there's been very strong policy stimulus. So apart from what the RBA is doing, fiscal policy has been very strong, putting cash into households as well as the JobKeeper program. So these things have spurred on consumers to maintain a strong level of consumption, which is typically not seen at these stages of the recovery. So that has helped things. And of course, Australia has had the commodity boom, and that gave a nice bump up in terms of net exports as well. In China's case, I think what we are seeing is the fact that Chinese policymakers are somewhat more conservative, especially as they worry about property market bubbles, so on and so forth. So whilst China's supply side recovery has started very well and continues to be very strong, the migration of that into the service sector is not as even. So not all parts of the economy are enjoying it. And that tells us the bigger story, which is the recovery as we go forward will probably remain intact, but the shape and form will be different in the sense that it will not be as even and it'll be quite bumpy across. So these are the things that we probably need to bear in mind as we look at these data points.
And also, I would take it then, looking at the numbers and the sectors, it's going to be a very different picture from market to market, depending on, for example, the Thailand story with the heavy dependence on tourism, which is going to take a much longer period to recover. wherein we contrast that in an ASEAN story to a Singapore, which is a trade and export related sort of economy, and that's going to obviously show up in that unevenness.
Yeah, I mean, that's certainly a given, Brian, and I cannot agree with you more. So we're probably going to see as this recovery continues, North Asia may perform quite well, especially if China ramps up its demand for high-tech goods as it looks at its dual circulation policy. And as you rightly pointed out, a lot of the economies that have a larger domestic sector that's sensitive to high oil prices and or a tourism sector that may still face some delays in restarting even in H2 in the second half of this year would have to play catch up. And the other thing, I hate to use such terms as multipliers, but basically it means the more even the recovery it is, it's more likely that we're going to see any policy stimulus bearing out as better results as a lot of the pickup feeds off one another. Since this is a little bit more uneven, we may get a softer kind of recovery in some other places.
Now, I want to take you up on what you just mentioned in terms of oil prices. And markets are watching tomorrow's OPEC Plus meetings like hawks. What is your view on the direction of oil prices, given the recent spike, and also given the fact that within OPEC Plus itself, you've got some producers like Russia who are bullish on increasing production and tapering back some of the cuts. But then the Saudis, on the other hand, and most of the others being a lot more cautious.
I mean, that's really a very good question, and I think it's interesting to watch not only in terms of this meeting, but the strategic outcomes as we go forward. And I think it's best summed up by the Shaka Khan song that's "Tease Me," and that's really what the meeting is going to be about. Because regardless of the statement, we know there are a lot of tensions, as you rightly pointed out. There are different factions, and the bigger question is, in our view, we think they're going to phase out the supply cuts. I mean, as it is, OPEC has cut more than 7 million barrels per day. So there are two questions here. The OPEC white cuts are being restored, give and take, or being allowed to be restored, give and take, at about 500,000 barrels each month. So they're slowly stepping it up depending on how demand works out. Saudi's cut, the additional 1 million barrels per day, was supposed to expire in March. It was for 2 months, February, March. So the question is, will Saudi immediately reinstate everything or also phase that out? So depending on the exact details of these things and the communique, we could see very different outcomes. But overall, what's the impact on oil prices? We think the recent run up in oil prices, there could be some volatility around it, but it may not push much higher at an aggressive pace because some of the supply disruptions from places like Texas will also come back on. So we think it'll settle about where it is, but it'll be well supported because of the cautious way in which supply is being restored.
Now, Vishnu, thank you very much for your insights.
My pleasure.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.